So today I'm going to talk about a stock that I sold. I completely sold this position out, and then when I sold that stock, I bought a brand new position with the money that I made from that stock. So I'm updating you with some changes in the portfolio. Apologies, this video was supposed to be on Friday, but work was just too busy, and then it got to Saturday and I thought I'm going to have a day off myself. So I thought I'd stick it on a Sunday. And for you eagle-eyed viewers of the US portfolio update that I did about 2 weeks ago, you would have noticed that this stock that I sold was not in that US portfolio, and you would have noticed that I blanked out a new stock, and this is the new stock into the portfolio. I made these changes on around about the 9th of January, just to kind of give you a bit of heads up around the timing. So without wasting any more time, let's get started. And as always, if you want to know my live buy and the sell alert, so you guys on the Patreon know I made this move around about 2 weeks ago, so you get the live updates on there. As well as that, you get 2 exclusive videos on there. We are going to do a live Q&A session later on the Patreon, so you can join to see that. £5 a month, 2 exclusive videos, a Discord with 500 members on to talk about stocks, including me, is not too bad for £5 a month, even if I do say so myself. And while you're here, if you do want to start investing, join Trading 212. That's personally the broker that I use. If you join through the link in the description, you can get a free share worth up to £100. But let's get on to the stock that I sold. So the stock that I sold was a relatively new position in the portfolio, and it's gone straight out, which is Etsy. So I did sell all of my shares in Etsy, and it does seem in the short term a little bit of a good move, because since I did sell the shares, it has dropped around about another 10%. Not gonna lie, that's just pure luck though. I wasn't planning on it. I'm not gonna claim I'm a short-term genius, but it does actually make sense. It is downtrending a little bit because there has been negative news out there, and that is the reason why I did sell Etsy. Now, I did only get into Etsy around about 2-3 months ago. I actually caught it pretty much at its 52-week low, which is not like me to do. Normally I'm catching a couple of falling knives, but I seem to get it right at the bottom. The stock started going up, and over December, I started seeing some bad news come out from Etsy stock that I started to sell the position. But I'm going to say one of the reasons why I did sell Etsy is that I was not able to build it into a full position. I was not willing to buy Etsy at $69. I was definitely not willing to buy it at $83. My plan with Etsy is to buy a starter position in the $60 range and then hope it goes down to the 50s or the 40s. That was my plan. So with the stock going up, I was kind of caught in no man's land, where I held a position which I didn't want to buy anymore because I wasn't willing to buy up these levels. And then I also saw some bad news coming out as well that I didn't like about it. So with the combination of sitting on I think it was a 20% gain, which isn't too bad, I sold the position off because I wasn't willing to buy anymore at these levels when my original plan was to get it sub 60. So there was a part of it that I wasn't able to build a full position, and the share price went up. Now, what also happened in that time frame is they came out with some news that I didn't like, which was they were laying off 225 workers after essentially flat sales, says CEO. So it sounds like to me they still have a lot of weakness in the sales, and the thing is this came out on the 13th of December. Now, this is during the peak of the Christmas trading period. Now, I would hope to see on the 13th of December where they go, actually the Christmas sales are still doing quite well, so let's not do this just yet. But the fact they did it in the peak time says to me that they're seeing a weakness in Q4, which I was expecting a good Q4. And if you actually see what that led to on analyst estimations, a lot of the analyst estimations have been going down for this year, for Q4 and for 2024. So you guys that were on the Patreon, shout out to the Patreon again, you'd have seen that when I did my valuation, for me to be getting a 100% return on Etsy, I would need to see this company growing EPS at a 10% clip and growing revenue at 10%. Now, if you do look at the recent figures, they are going to grow at 6%, which is a little bit short of what I wanted, but then next year it's going to go to 4%. Now, analysts are getting a lot more data than what I am, but the suggestion of weak sales and layoffs and what analysts are expecting, I was like, this isn't good. And if you actually go back to what they were forecasting a year ago, so I'm using Wayback Machine here to go on Yahoo Finance, they were expecting 7% growth this year, which has obviously gone down, and 12% next year, which obviously is massively down from where we are right now. From an EPS point of view, they're expecting $3.33, and now next year we're expecting $2.68, which is not good at all. Now, obviously that's still an improvement, but that's job cuts. Realistically, we can get that one-time improvement, but the big thing is I need this company to grow 9-10% growth at least to get a good return from it. And obviously that's way off it at the moment. So yeah, with the worrying signs of a weak Q4, with numbers, forecasts getting a little bit weaker, and also me sitting on a bit of a gain, I was a little bit like, I'm not liking this as much as what I did when I first bought it. And the shares have gone up way up what I'm willing to buy at the moment. So let's move this on. So I did sell Etsy for a 20% gain. Now that did mean that I had some cash and I had a position open to buy a new stock. Now, once again, we're going back to the Patreon. On the Patreon, we do a stock request, and this is where members of the Patreon get to vote for me to take a look into a stock. And I do around about a 20-minute, 30-minute video on it. And I got to be honest, a lot of my stocks at the moment come from the Patreon members, which is absolutely amazing. And they suggested me to do a video on this stock, DLocal, and I did the research on it, and I thought this was going to be like 3-4 hours research on this stock. Ended up being a whole weekend. I spent a whole weekend looking at this stock, and I was like, this is really good. And DLocal gave me Mercado Libre vibes, which I own at the moment and has done very well for me. So getting a bit of Mercado Libre vibes. I am going to build this up into a mid-sized position though, because it does have a little bit more risk. And I'll repeat that one more time because some people don't listen to that part. There's a little bit more risk here. So with it being that little bit more risky than, say, a Mercado Libre, I am going to keep it a mid-sized position. But saying that, I do really like the valuation and I do like the financials they're currently putting up. So what do? We currently enable global merchants to connect seamlessly with billions of emerging market users. DLocal is an all-in-one payment platform connecting global merchants to over 900 payment methods in Africa, Asia, Latin America. Now they have 600 plus merchants. You can see some of the examples here, like Nike, for example. There's Shein that's also a partner. I think Shopify is as well. They have a lot of clients. So there's a lot of big brands trusting them to use their payments. Now what they do is obviously emerging markets. So there's a little bit more risk with the payments in the emerging markets, and they handle all the payments for these companies in these emerging markets like Africa, Asia, Latin America. Now most of the revenue does come from Latin America, which I like because there's a lot of fast growing e-commerce and fintech in Latin America, and that's why I have bought the stock. So what they have is pay-in. DLocal enables global merchants to accept consumer payments in emerging markets using various local payment methods, including credit and debit cards, bank transfers, e-wallets, and cash payments. Payout. DLocal enables global merchants to pay suppliers and contractors in emerging markets. Currency conversion. DLocal offers competitive currency conversion rates and helps merchants manage foreign exchange risk. And fraud prevention. DLocal uses various measures to protect merchants from fraud and chargebacks. So this is a pretty good moat that they are handling all this for them, especially the fraud prevention as well. Now, I believe that Amazon is actually one of their clients, and Amazon, I believe, before they selected DLocal to become their actual payment provider, did 2 years of research before selecting their payment provider, which was DLocal, which kind of shows you the DD that goes on in this market, and for them to select them, and then probably the switching costs here probably suggests to me that there is a bit of a moat around this company, which is good to see. Now, fintech itself, we've seen massive explosion. We've seen it in a lot of Latin America countries like Brazil and Mexico. We've seen that success with the likes of Mercado Libre. But this is obviously a pure fintech player. And the great thing about this is that it's just a fintech. You know, e-commerce kind of weighs down on your profit margin, whereas fintech is very high margin. And the rates they're charging because of their risk associated with the Latin America, with the payment into these sort of industries and in these markets and these countries, there is that element of risk there, but also means the profit is also very rewarding as well when it does go right. Now, when you do look at the recent results look a little bit meh. So you look here, the EPS was a bit of a miss. The revenue growth was, very impressive at 46% year over year, but it was a miss. So you look at these results here and you go, it looks pretty impressive, but you'd rather have them be in estimates. Now, this is where the big part comes in. If you actually dig into the results, you'll be able to see that revenue was up 47% year over year. There was a big currency devaluation in Nigeria. Now, any of you guys that own Airtel Africa, you would have seen the exact same thing going on. So this is no surprise here. But if it wasn't for the currency devaluation, revenues would have been up 58% year over year. So then when you go back to these numbers here, if it wasn't for that currency devaluation, imagine how much of a good beat this would have been. And we know the currency devaluation isn't going to happen forever. And the other thing as well is that we know the exposure to the likes of Nigeria is getting smaller and is a smaller part of the business, which is all fantastic news. So this is really good when you look in this sort of space here. And then when you look at the financial point of view, the growth has been so impressive. And then once again, you go back to what the stock is valued at. This stock IPO'd in 2021 at $34. So since the IPO in 2021, you're talking nearly 2.5 years ago, the stock is down 50% since its IPO. But yet you go on to the financials and look at the revenue growth performance here. Fantastic growth, and should continue to grow as fintech continues to expand in these emerging markets. And you look at the profitable growth, like I said, there is that high risk with the currency fluctuations here, but if they do get it right, the profitability they're able to throw off is very impressive. So I really like that with the business. As you would expect, because they have good growth, very good amounts of profitability, you can see here that the balance sheet is immaculate. There's no debt on the balance sheet. If you look at the cash, they currently sit on 602 million of cash, which is pretty healthy, over 15% of the market cap on the balance sheet, which is great. And ultimately, that leaves you at a company that trades at 37 times trailing earnings. On a forward basis, 20 times earnings, which you'd say 20 times earnings for a company that is about to put in these numbers. EPS to go from 0.55 to 0.74, which is impressive. Revenue growth to go up to 37% next year. I think that's pretty good for 20 times forward earnings. I think that bakes in a lot of risk there. You consider Mercado Libre, I think they currently trade at 20 times earnings. It doesn't look too bad. Now, you're probably thinking, this is a very good valuation for that growth. What is kind of going on here? Why has nobody decided to pick up these shares during 2023? Because yeah, it's up a little bit, but it's not as much up as a lot of other companies have rallied. Well, there has been a few things in the background. Now, I do go into the risk a lot more on the Patreon video, but there was a short report out by Muddy Waters, which have a bit of a track history of sometimes hitting. And I think when someone that has sometimes hit on a short report and come out to be true, I think there's that element of worry around it. Now, when I look at the whole Muddy Waters short report, there was a few things that I thought are probably true, but there's a few things that are exaggerated a little bit. Now, I think some of the things were like shareholders selling shares. They're allowed to do that. I think they said that they IPO'd at a high price. Well, it's 2021. It's not a fraud to IPO at a high price. There was a few things around the accounts which I do think was a little bit true, and we'll get onto that in a little bit. But I think that's tainted the stock a little bit, and they're trying to build up the reputation again. I think this has created a good opportunity for a stock that's been overhung with this short report, a good valuation here. Now, what they have done in between this is they have, I believe they did a share buyback. I think they've come out and responded to the short report. And by the way, the short report isn't recent. The short report was on November the 16th, 2022. So yeah, about coming up to over a year ago at least. But what they did is they actually appointed one of the companies that I love. They appointed Pedro Arnt as co-CEO. Now, he was the CFO for the last 12 years at Mercado Libre. Obviously, you guys know I own Mercado Libre, and is a fantastic company. So the fact that the CFO from Mercado Libre is willing to put his neck on the line to come to DLocal, he would have done the DD into the financials. So the fact that he was at Mercado Libre and he's happy to give up that job to become the CEO at this company gives me a lot of confidence. And by the way, this came after the short report. So I really like this. This gave me a lot of confidence where if he's coming across from Mercado Libre, a really great company, he's not going to come to a fraudulent company. And he would have done the DD on it. And I think this was a really boost of confidence. And in fact, on the day, on the 15th of August, when this actually did come out, I believe, yeah, you can see it here, the stock was up nearly 50% on this news. So that gave the market a lot of confidence. So that's something that I really like. I think if it wasn't for that news, I don't know if I would have bought that stock, but the fact that he's come in with such knowledge in this area, I really like that. And what he's also done since that time frame is that, and I don't know if it is because of him, but the actual CFO has stepped down, and it sounds like it was a bit of a push why he stepped down. And obviously, why would he have done that? Well, probably the Mercado Libre CFO came in and went, yeah, you're not doing a really good job and we need to get some confidence back into the stock. So we're going to kick you out. I think I can get someone in better, restore some confidence into the stock, and this was the latest move and I really like this move. So once again, it kind of shows me that the confidence that the new CEO comes in and making sure this is a company that will be primed for the next kind of 3 or 4 years. So yeah, there is reasons why this stock has maybe gone to such a cheap valuation, but financially, a company that is a clean balance sheet company in such a growing area with good revenue growth, good profit growth, 20 times earnings. You're getting the Mercado Libre old CFO in as the CEO, which is, I think, a big confidence driver. And as well as that, you look at the amount of customers that they are taking on board. You're not going to have these big customers take on no one. They're not going to take on a fraudulent company. The fact that these companies like Amazon, for example, are taking them on and doing the big DD on them and then going, yeah, we're choosing you, I think is a big statement. So yeah, the amount of big clients that they've got here with emerging markets, the Mercado Libre CFO coming in as the new CEO, I think it's worth me putting some money in this position. I'm not as confident on it as Mercado Libre as just yet, but I think the short report has created a good opportunity in the stock. And I think when you look at the progress they have made since then, it looks very interesting. So yeah, this is just a video from me saying that I have sold my Etsy shares, and with the Etsy shares that I sold, I have moved it into a new stock at DLocal. So I hope you enjoyed it. Let me know what you think of it in the comment section, guys, and I'll see you in a bit.